So, what are we going to talk about? Well, we're going to talk about the importance of discipline in trading and where it comes from, not unsurprisingly, and really how to ensure your trading is always on point when it comes to discipline. And what do we actually mean by that? We just mean really about, what are the things that may be preventing you from achieving good levels of trading discipline, and what are the sort of simple things you can do to effectively help you improve your own trading discipline. We'll talk a bit as we go through about some of the easiest discipline mistakes that all traders make, okay? And myself, I'm no angel, okay? We're all humans, we all make mistakes, okay? But it is about finding ways to help develop our trading discipline in order that our mistakes are fewer and smaller when they occur. But don't let anyone tell you that they never ever make a mistake in their trading or with their trading discipline. We're all humans, okay? And you'll learn a little bit about that as we touch upon it. And I'm going to share with you a daily trading tactic to practice and help build your discipline as a trader. Hopefully that's something you can take away and start from tomorrow, okay? In terms of just one little simple exercise you can do to begin your trading sessions that will help you enormously in sort of building your trading discipline muscle. As always, we want to help you with your own trading journey, and with that in mind, you can join us on the exclusive Trading Spotlight community on Traders Yard. So you'll find that I'm going to be in here for most of the afternoon here today, but also throughout the week, and with my colleagues Marcus and Jens, who put out some fantastic posts and insight there from their own trading endeavors. So it's an opportunity for you to sort of join us and sort of get to interact, get extra questions answered that you may have thought of after watching this particular session. So you can join us there on tradersyard.com and join the Trading Spotlight group, tradersyard.com/group/312. And I look forward to engaging with you there after the webinar. So for those of you who don't know me, my name's Paul Wallace. I've been trading for a good while, okay? I've sort of coached, mentored traders. I've worked for funds and also basically consulted to hedge funds as well. And I'm primarily a swing trader with a little bit of intraday trading on the side. And Admiral Markets is a Forex and CFD broker, over 8,000 financial instruments. You can see there they've got real global reach there and are regulated across several environmental environments, provide very competitive spreads on their major products, and you're allowed to engage with the markets using MT4 and MT5. And if you have any more questions, please contact your account representative and they'll be very happy to guide you. So the discipline exercise, ladies and gentlemen. So as I said, if you've been trading for a while, you may have had your own challenges with trading discipline. If you have, please just comment there in the chat box here, or if you're watching this on our YouTube channel or Facebook group or on the Traders Yard group, then just drop in your own thoughts about your own challenges and your own insights from trading discipline. We really do enjoy hearing your own view and your own take in it, and perhaps maybe we can help provide a little bit of support in your own journey. But anybody who's traded for a while will realize that discipline is constantly lauded as one of the prerequisites of successful traders. And however, it can be enormously difficult for some traders to exercise and manage their discipline. And today we'll discuss what trading discipline is and how you can develop it. And as I said, we're going to show you a simple trading tactic that will help you develop your own self-discipline as a trader. Okay, and hopefully that'll be something that you can, as I say, take away and work on and enjoy, and actually use it as just one of many tools to help you improve your own trading discipline. So, let's start right at the beginning then, shall we, ladies and gentlemen, talk about, well, what is discipline? Okay, so if you look in the dictionaries, you'll have a definition of discipline as training to act in accordance with rules, an activity, exercise, or a regime that develops or improves a skill, or a set or system of rules and regulations. So that's the sort of kind of definition of discipline, and they all, you know, they could be overlaid on many aspects of your life. But what we're here today to talk about is trading, okay, and in particular your trading discipline. But if you think about that in terms of, you know, just looking through a prism of trading to act in accordance with rules, well, that is increasingly important as you develop as a trader. It's about having the ability to follow a simple set of rules, and about having an activity, exercise, or a regime that develops or improves a skill. So in the same way, if you want to learn how to play golf, okay, or you want to learn how to play the guitar, or you want to learn how to speak a different language, okay, those are activities, exercises, or regimes that develops or improves a skill. Same for trading, okay. If you want to get better at being a trader, well, you know, you have to have a regime that helps you trade and helps you develop as a trader, or a set of system of rules and regulations. If you speak to all good traders, okay, and I've been very fortunate to work with, to help mentor, coach, you know, thousands of traders over the years, okay, and all of the good traders, all right, all of the good traders I've worked, regardless of whether they are retail traders or hedge fund traders or working at another institution, they all work by a set or system of rules and regulations. One of the reasons they have all of this is that actually it helps save them from themselves. It's what actually keeps you safe when you're trading in an environment that is, in many respects, has little or no boundaries. You can actually do whatever you want in trading within sort of some simple rules in terms of capital and when markets are open, but within those boundaries, you can really do anything. And if you're not used to actually operating in such an unbounded regime environment, well, then it allows you to sort of maybe sort of not always make the finest of decisions. Hence where trading discipline comes in, and hence what we're going to talk about for the rest of our session today. So, you know, as I've said there is, you know, if discipline is so important, why do traders struggle with it? Okay. And, you know, I speak to traders from, you know, all backgrounds. Okay. And, you know, one of the things that they talk about is, you know, struggling with their trading discipline. Or rather, their trading performance only improved once they had actually embraced trading discipline, okay? Once they'd actually sort of got to grips with actually having some discipline in their trading and the way they engage with markets, that is one of the major elements where their trading started to turn the corner, where they started to improve. But why do traders struggle with it? Because, you know, it's very easy for us to sit here and just say, well, I have a set of rules and follow it. I appreciate that. It's very easy to say that. But sometimes when you're actually sat in a very fast-paced, fast-moving, fluid, dynamic, intense market, it's not always easy to be operating in a sort of as a disciplined trader. So, you know, what are the sort of things that kind of like play into sort of helping trading discipline in terms of, you know, why do some traders struggle with it? Why do some traders particularly find it easy? So, you know, I've just got a few ideas here, okay, and there's more. There's just not it's not an extensive list. There will be other areas, and you might yourself have a particular reason why you think trading discipline is difficult for some trades. And if you do, please drop it in the comments box, okay, or in the chat box. We're always fascinated to see your insight on your own view of trading. But sometimes, you know, here we've got like routines, okay. What you find is that, you know, if somebody's come from a very sort of, let's say, a very routine job sometimes, okay, a very job that is actually quite routine, one of the things that attracts them initially to trading is the fact that actually they don't have to have a routine, that they can just open their laptop anywhere, okay, and trade from anywhere in the world on all manner of different markets. So sometimes actually they do it, those traders struggle with it because actually they're just trying to escape a routine that they've had in their other part of their lives. You know, and it's an interesting thing that, I do see that a lot with particular traders, okay, that they don't want routines. It's almost as like they're trying to rebel against the system, so to speak. But actually what you realize is that actually having a simple routine can actually help you enormously. That kind of also links into elements like motivation, all right, okay? And, and part of that is a question for yourselves about understanding your real deep driven, your deep motivational drives as to why you're engaged with trading. What is it that really brings you to trading? Okay, really have to sort of dig into that, ask those questions and reflect, and really sort of be quite honest with yourself. Tend to be, you find that, it's easier to follow, kind of have discipline when you have the right motivation. All right. So I can talk from my own experience, okay, from many years ago, from being in the from being in the military, from being in the Air Force. You know, it's where I wanted to be. It's what I wanted to do. Okay, I was motivated. So even though there's a great deal of discipline in that lifestyle, okay, you know, my motivations were very clear to me. Okay, I was understood what was driving me. Sometimes if you're not trading for the right particular drivers, well, that can actually help or rather hinder in terms of, you know, it's sort of sticking to a sort of set plan for your trading discipline. And as you said there, it touched upon the lifestyle, okay? You know, some people come to trading because they want that lifestyle, and they believe that that lifestyle doesn't have any discipline, doesn't require routines or boundaries. But actually what you find is that the good traders, you know, they're able to develop and bring that into the trading. Maybe they have disciplines that they follow in other areas of their life they bring in, or they've had other experiences, like, for example, like myself, past experiences. But all of that kind of plays into sort of developing trading discipline. Some of it can be linked to rewards, okay? People that, and that's, you know, they just want sort of those, they're just wanting to look at the way they are rewarded as a trader, and they think that they can achieve that without having a requirement to be disciplined in their trading. Some, they're just looking for instant gratification. They just want basically instant gratification from the market because maybe their motivations aren't particularly clear to themselves, or maybe not ones that help them in the ways they operate. And so they feel that they don't need to be disciplined because actually they're just looking to put a trade on quickly because they just want the instant gratification of a quick win. If only it was that simple and easy, ladies and gentlemen. But also one of the big drivers there is ego as well, especially I have to say with us males of the species, okay, in terms of our own ego. It's because your ego is trying to keep you safe, and part of that ego, one of the ways it operates is that it makes you think that you already know what's going to happen next. You don't need to be disciplined as a trader because your ego is already telling you this is what's going to happen next. But as I'm sure most of you have found when you've engaged in markets and trading, you'll realize that, you know, what you think might happen next and what actually happens can be quite different. And actually, you know, developed traders, okay, sort of you almost say disciplined traders, realize you don't actually need to know what happens next in order to place the trade. If you have a disciplined, robust trading plan, you don't actually need to know what happens next to be able to put on a good trade. And it's that maybe that little bit of battle with the ego that actually sort of underpins lots of those elements. And that's a battle that is one that you have to embrace within yourself, okay? And it will require an element of behavior modification. And as part of that, well, you know, part of that is that this little exercise that we're going to share with you here today that might actually allow you to basically improve on your overall trading discipline. So there you go. There's just a few ideas as to why many traders struggle with being disciplined as a trader. But the reality is that, you know, all good traders I know have a good, strong element of discipline within the trading, within the way they conduct themselves within financial markets. So, you know, what can we do? Well, as I put there, I want you to think of discipline almost like a muscle, all right? And like any muscle, whether it be a bicep or whatever other muscle you may choose to think about, a muscle needs to be trained, okay, to improve its strength. It would all be nice and easy if you just didn't have to go to the gym to sort of build a muscle. But you will know that if you want to build muscles, then you actually need to go out there, whether that be playing a team sport, whether that be hours in the gym or rowing or riding a horse, whatever you kind of endeavor you're engaged with. And actually, that's very similar with trading, okay? If you want to be a disciplined trader, well, then it helps to basically just conduct exercises that strengthen your sort of almost like your trading discipline muscle. And that's what we're going to share with you here, ladies and gentlemen. That's what we're going to talk about here in terms of, you know, how you can go about and actually do that. So what we have here is, you know, we use a discipline exercise, okay? Just think of it like, you know, you're training your trading discipline muscle, right? And it's something that you can do, you know, at the start of the day for those of us trading European session. That you can do at the start of the day to basically just get you into the right frame of mind, right? Building disciplined trading right from the off, right from the opening of the trading European session. So what is it? Okay, well, it's based around an early morning breakout. If you're unaware of what a breakout is, well, then you'll find that throughout the Trading Spotlight webinar series. There are quite a few videos in there that talk about differences between bounces and breakouts. Okay, you'll find that my colleague Jens has done a couple of excellent webinars on trading breakouts in both the sort of early morning DAX session and also in the afternoon for the S&P. So by all means, I would recommend that you go and find them and view them on the Admiral Markets, whether it be on our YouTube channel or whether it be on the Facebook page or in the Traders Yard group. Go and find out and understand a little bit more about breakouts if you're relatively new to trading. But this discipline exercise is talking about early morning breakouts. Well, so there's lots of different variations. You can trade early morning breakouts within FX markets quite easily, quite simply, and you'll find lots of different variations on that. What you realize, though, is that if you're going to trade that, that you realize that it's a numbers game. Okay, and what does that actually mean? That means that you have whether it be a breakout strategy that effectively has a positive expectancy over a period of time. Maybe that might be a quarter, half a year, 12 months, etc. It is really about a numbers game. It's not about the outcome of one random individual trade. It is about a sample size of trades, and we'll touch upon that a little bit more in a few slides' time. But actually what it does require to be able to trade early morning breakouts is it requires discipline, and it also requires an element of consistency. It's something you need to be doing every day. And that's actually an interesting thing that I have found myself in terms of my own trading, and also working with hundreds and thousands of traders over the years, is that the two very much are very well combined. Okay, it's very difficult to be disciplined without being consistent, and it's very difficult to be consistent without being disciplined. The pair of them are, they mutually supportive, and we want to use that in our trading to actually try and improve our own trading discipline. Okay, being able to be disciplined and consistent, and this exercise will allow you to do that. So here's what you're going to do. Here is your mission impossible for the start of 2020. Okay, so or maybe it is mission possible, ladies and gentlemen, if you want to have a think about building your self-discipline. So as in the movie, your mission, should you choose to accept it, fellow traders, is you're to trade using this following method for 50 trades without amending any of the rules. Okay, this is about simple rules and you following it with consistency and discipline. If you succeed in your mission, this will prove you a disciplined trader who can follow the rules. And that kind of, as I said, that sort of digs into a deeper, wider story, okay, about having rules that we can follow. Why do we need to have rules that we can follow? As we sort of talked about in a couple of the slides back, is that what we saw is that markets are, for the most part, okay, operate without kind of any particular boundaries. Okay, once you have trading capital, once you have an open market, you can quite literally do whatever you want, and that is both a help and a hindrance. All right, part of the reason about having these rules and about developing a trading discipline is that you develop self-trust. Okay, self-discipline leads to self-trust. What does that mean in trading terms? That means that you can trust yourself to do the right thing at the right time based on what's going on in the markets. And you have to develop that trust within yourself. And the only way you develop that is following an exercise like this, so that you can actually demonstrate it to yourself consistently, that you will have the discipline to basically follow the rules, and that you will know what to do, okay, when something changes or something happens, because as we all know, markets constantly change. So what are we going to do? What are we going to do here, ladies and gentlemen? So this method is looking to catch the very first small move of the day when the major market players are coming to their trading desks at the start of the European session. So in Europe, this would be around about 8 a.m. With the 1 hour time difference, this would be 7 o'clock UK time. Okay. So what we're looking to do, the first step is that we need to identify the trading range from 6 a.m. to 7 a.m. UK time of two FX instruments, the pound against the US dollar and the euro against the Japanese yen. We need to just simply find the highest and lowest price achieved in this time period. Now, you can, by simply looking at the high and the low of the 1 hour candle, this will give you those numbers. Okay, you can just find out what was the high between 6 and 7 UK time on pound against dollar, euro against the yen. But what we're going to do is we're going to break it down onto a 5-minute chart, just so we can see it, just so you can actually have the ability to understand what we're looking to do. But this is about You know, as we come towards the end of the Asian session and we're getting ready for the Europeans to come into the market, starting, as I said, from sort of 7, 8 o'clock, we are looking to just capture part of the first little move. That's all we're looking to do. We're not looking to try and hit a home run, okay, a big trade for the rest of the day. This is just a simple discipline exercise based around early morning breakouts in the pound against the dollar and the euro against the Japanese yen. There are two different instruments, okay? The two different FX instruments. So it gives you a little bit of difference, gives you a little bit of opportunity for moves. And as we'll look at the charts in a moment, we'll just show you how it actually plays out for you. But what you're looking to do is just identify the high and low of the 1 hour period between 6 to 7 a.m. UK time of pound against dollar, euro, yen. Just want to particularly stress that. So, you know, what we have here, and hopefully this should build up, is this was the pound against the dollar just a day or two ago before, and what we can see is actually, you know, we have the period here. This is the period between 6 to 7 a.m. okay, our UK time. And this is, remember, this is a 5-minute chart, so you're expecting to see 12 candles, okay, 12 candles to make up that 1 hour of trading behavior. So we can see it there. We then have that period to identify, there we go, the 6 to 7 a.m. UK period. We can work out from this particular one, at that particular time, we had the high of that particular range was 132.56, and the low of the range was 132.43. So actually a very small range, okay, and that's a conversation for another day about the size of the ranges and how you can utilize that information. But this is really all about, simply about just discipline. Okay, this is just a simple discipline exercise. So we've identified what was the high and what was the low of that range between 6 to 7 a.m. in the UK, 6 to 7 a.m. UK time. You know, that's a very small range. A small range, what's that, about 13 pips, as I said. Normally the range can be a little bit bigger. We prefer it to be, there's like a kind of a Goldilocks range we like it to be in, but you know, for the discipline exercise, we trade what we see. So now we have the numbers for our range. So to keep this strategy as simple as possible, we place our stop loss 10 points away from our entry, and our target is 15 points from our entry. So we have a risk to reward of 1.5 to 1. As this is a test of discipline, this is all about keeping the stakes to a minimum, and we place the trade at the smallest amount that you can. So on an MT4 platform, that might be down to sort of a micro lot, which might be around about 10 pence, 10 cents, you know, depending upon your the base currency of your particular account. This is about, you know, this is, remember, a test of discipline, okay? So it is about, you know, we want to trade this, you know, in the market, we want to trade this live. Could we trade it on a demo account? Yes, you could, but it would be better to use a real money account to see how you handle the psychology of winning or losing trade. Does that have an impact upon your ability to be a disciplined trader? But remember, this is trading, this is like one micro, the smallest that you possibly can trade, okay? This is not about the money, okay? This is about developing and building your particular trading discipline muscle. Could you actually sort of put this trade into an EA, into an algo or a robot? Yes, you could, but then you're not really benefiting from building your discipline muscle, okay? You're just literally, you know, what you're doing is you're putting a filter between you and your trading discipline, right? And that's why a lot of people love to go towards trading algos, trading robots, and I think my colleagues, Marcus and Jens, have done videos on that within the in the Trading Spotlight series, which you can check on the YouTube channel. But this is about building your own trading discipline muscle. So you trade it at a small micro lot, okay, and you trade it, okay, you know, manually, okay, you manually place the trade. It's not about being algo-wise to begin with. This is about building your trading discipline. So, you know, if you're looking to place a short order entry, that short order should be placed 1 point beneath the low of that range. So the low of that range that we saw there from last week, okay, low of the range was 132.43, minus 1 point means our entry level, okay, our entry level is at 132.42 for a short order. Our stop loss, remember what we said, our stop loss is 10 points away from entry. So in this particular case, our stop loss would be at 132.52. And our target level, remember, our target level is 15 points away, okay? So in this particular case, Our target would be 132.27. And that's what we're just going to place. We're going to actually sort of trade a breakout off the range. So we have a breakout, we work out the numbers for the short side breakout, and also we understand the numbers for the long side, okay, for the buy, okay, of the breakout of that range. And because we have our charts, our charts are basically, because our charts are on the bid, what we're looking is we place our long orders to be placed 1 point above the high of the range, plus the spread, which normally for pound against dollar and euro against yen these days is approximately 1 point, okay? It's approximately 1 point. So we've got, in this particular case, we had the high of the range was 132.56 plus 1 pip. So our entry level in this case is 132.58. Our stop loss, remember, the stop loss is 10 points away from entry. So on the long side, if we're getting long at 132.58, minus 10 equals 132.48 is our stop loss. And remember, our target is 15 points away from our entry. So our target level, 132.58 plus 15. So in this particular case, it's equal 132.73. So we're looking to work this out, okay? We're looking to work out that high and low between 6 to 7 a.m. UK time. And we're working out what is the high, what is the low of that particular time window. And we want to have basically place our breakout trades, okay, onto the long side and to the short side. In this particular case, last week's trade, what we saw was that actually we had our entry, it was our short order was triggered, okay, at 132.42, and then price actually traded all the way down, okay, towards our 15-point target, 132.27, and actually even went on just a little bit further in the price action. But remember, we don't care what actually happens, and this is not about making money. This is not about picking big winning trades. This is about discipline, okay? This is about making sure that you can put these two trades on correctly day after day, trade after trade, session after session. That is what we're looking for. This is all about a simple discipline exercise. That's what all of this is about. So here are the final points, okay, to put towards this discipline exercise to make sure that it goes into place. So there's only one trade per currency per day. Now just make that, take that on board. One trade per currency per day. Remember, we're doing this on the pound against the dollar and the euro against the yen. So it's only one trade per currency per day. So if, like we saw on the pound dollar for last week, if we saw that the short trade was triggered, well, then we take the long trade off. Now, you might have the ability to set an OCO order, the one cancels other, depending upon your particular trading platform. But what it might have to be is that you place, the long trade and the short trade, and once you see the trade is triggered in one particular direction, you make sure that you remove the other trade off the platform. Remember, this is about discipline. It's about making sure that you do the right thing. If that trade is triggered, okay, once that trade is triggered, then you leave the trade to play out, okay? You do not amend the trade. You do not move your stop loss. You don't move your target. You do nothing. This is about discipline, okay? This is about you following a very simple set of rules, okay? A little simple trade plan. The trade is triggered, then you leave the trade to play out regardless of whether it goes to your stop or whether it goes to your target. Here's another element, okay, a rule to take on board. If the trade has not triggered by 9 a.m. UK time, then remove the orders from the platform. Remember, we're waiting for the sort of kind of the first little breakout, okay? First little breakout of the European session. So, if we've placed this trade at sort of around about 7 o'clock and by 9 o'clock in the morning, it hasn't triggered, well then, what we're gonna do is we're gonna remove it from the platform, because what we also want to do is remember a lot of UK in particular, UK news will be coming out around about 9:30 UK time. What we want to do is this is about a discipline exercise. It's not about just trying to trade everything. This is about simple, just testing you, okay, to be able to make sure that you can sort of trade this simply. And as it says there, look for a sample size of 50 trades. So with 2 trades a day on pound against dollar and euro against yen, okay, there you go. 10 trades. There's 10 trades a week, okay. Then what happens is you can look for a sample size of 50 trades. And here's my challenge for you, okay? Keep good records to demonstrate your discipline. What I know and I hear and I see from traders is they take this exercise, okay, on board, and they say, oh, this is simple, but this is too easy. It's far too easy. and then they go and do it live, okay? And it challenges them because they could have had 2 or 3 losing days, okay, because it's just an S1. And they still have to put the trade on next morning. And then what happens is it starts to trigger all those elements. Remember I was talking earlier about their ego is telling them, oh, don't put the trade on. You don't need to do that. Don't put the trade on. I know best. I know best. I know best. This is not about that. This is about demonstrating that you do not need to know what happens next to generate a winning trade. It's about demonstrating that you can build a self-trust in yourself, that you can trust yourself to follow simple rules, follow a simple routine, and trust yourself to do the right thing at the right time based upon what your plan is. You'll find that even simply, just people trying to trade it, they will actually just look at, even though they still make simple mistakes like, fat finger syndrome, where they buy instead of them selling, okay, or they basically have the stop or the target is in the wrong level, okay. And so what we say to you is, do it. Just check how many mistakes did you make in that sample size of 50 trades? How many mistakes did you make? And then keep doing it. Keep doing it. Keep doing that kind of sample of 50 trades until you can do those 50 trades almost perfect in terms of you following the plan, managing those trades, basically not missing the trades, that you're consistent and disciplined in the way you actually complete this exercise. And that you'll find it will actually be, in some times, it'll be more challenging than you think. But equally, once you've actually shown you can do that and you can build that sample, you've got the records of a sample size of 50 trades, you will get an enormous amount of self-belief, okay? You will generate self-belief in yourself that you have the trust and the discipline to do what's necessary to be a consistent and disciplined trader. And that is what everybody's looking to achieve. And remember, this is an exercise about consistency and discipline, ladies and gentlemen. It's not about profits. It's an exercise about building consistency and discipline. It's working that discipline muscle. So to conclude, ladies and gentlemen, discipline is important to traders, all right? And you're unlikely to be long-term successful if you're undisciplined in your trading. I don't know of a single successful trader who does not have discipline as one of their core strengths as a trader. And as I said there, it's hard to be consistent without being disciplined, and also vice versa. As I said, can't be consistent without being disciplined, can't be disciplined without being consistent. So use the discipline exercise to help build and strengthen your trading discipline. We use it on the pound against the dollar and the euro yen every morning. And as I say, look to build a sample of 50 trades and test to see how you improve, okay? Test that you can keep the good records, you can put the trade on, you can manage the trade, you can prevent yourself from interfering with the trade once it has actually triggered and is running out. That in itself you might find difficult to do. You might find, once again, that ego just touching upon you to effectively sort of just wanting you to move your stop to break even, or maybe take your target away because you think the trade will run. Even these things, make notes of them, okay? It's fascinating. It's absolutely fascinating, okay? In terms of seeing how that market is, communicating to you, and how you are actually how you're actually behaving as a trader. It's quite fascinating to watch. So I challenge you. This is your mission possible. Look to build a sample size of 50 trades, okay, to test how you can actually follow this discipline exercise. So as always, as I said, come and join us on the Trading Spotlight community, okay? Tradersyard.com, tradersyard.com/group/312. Come and join us. I'll be in there for the rest of the afternoon and then in and out during the week, okay? And by all means, get in. We'll put in what some of our trading ideas. You have the chance to engage and interact with us and ask a few questions in there. We really enjoy it. Or if you have ideas for future trading webinars for the Trading Spotlight webinar series, we'd be delighted to hear them, okay? And we'd love to hear your thoughts and your feedback. So as always, don't forget to join us next time, ladies and gentlemen. On Wednesday, my colleague Marcus is going to talk to you about how you learn about when to cut your losses and let your winning trades run, okay? He's going to be talking another element of the psychology of trading. Why do we close winning trades too early but leave losing one's open too long, examples of your past trades that you left or open or closed when you shouldn't have, and talk about how do you know when is the perfect time to close these trades or leave them open. So it's a fascinating topic there to discuss. Join him, okay, Wednesday, 2 p.m. London time on Wednesday, January the 8th. You should also have the sort of link in your inbox, or you can find register on the Admiral Markets website. As always, there's plenty of analysis and education to go on the admiralmarkets.com website. If you have questions that you're watching this sort of delayed, by all means, we love to hear from you. You can contact us there, email hello@admiralmarkets.com. You can find all the videos from the Trading Spotlight series, youtube.com/Admiral Markets or facebook.com/Admiral Markets Global. Thanks for joining us today, ladies and gentlemen. I hope that's given you a little bit of food for thought. Okay, we're starting 2020. This is the opportunity for you to take this on board. Okay, and sort of make 2020 your most disciplined trading year ever. So we've got a couple of minutes left. So what we'll do is I'll just for the last couple of minutes I'll just switch across to the Admiral Markets MetaTrader platform. Just have a quick look at how those trades played out this morning, so that you get an idea of what we see. And yeah, we'll just do that for the last couple of moments. So if you just bear with me. We've got just a couple of moments, and we'll just look to switch across. Super. Here we're back. I hope you can still all see me. I hope you can sort of see my charts as well. Okay. Here we go. So here we are this is the pound against dollar 5-minute chart. Okay. And actually the 5-minute chart. Okay. We can see here what I've drawn in is, let me see. Let's just get my element here. Is that this was the range here today, a very small range. Okay. Very small range. Now, I just want to point out to you that we're looking to do this between 6 to 7. Okay, 6 to 7 UK time, all right? But just remember that depending upon where you're based, the Admiral Markets MetaTrader platform, in my particular case, is 2 hours ahead, okay? It's offset 2 hours to the front. So when I'm looking for the sort of 6 o'clock in the morning, what I'm actually seeing is here, you'll see here, this is the 8 o'clock, okay? 8 o'clock is the start of my range, okay? And you can see our 12 candles there, okay? We had our range, and actually what happened is we triggered here. We had our long trade as what, 130.85, okay? So it's 2 points above the high of 130.83. And we see price did actually move. Price moved particularly moved about sort of 9 points in our direction before it fell around, and actually it sort of hit our stop loss. So that was -10. But remember, the definition of success of this is that you were able to put the trade on, that you were able to manage the trade accordingly, you were able to let the trade play out. That is the definition of success, not necessarily how many sort of pips you made on the day. If we look at the euro yen for today, okay, we had the same area. Remember what I was saying is that, the sort of Admiral Markets, okay, the sort of the UK European session for me is 2 hours offset. So here we have, this is, the kind of 8 to 9 o'clock on the chart. That is actually 6 till 7 UK time. We had a little bit of a bigger range here, okay, and what happened is, the trade triggered. Let me put my here. The trade triggered. So of course, once my long trade is triggered, you're removing the short trade off the platform, and then effectively price went all the way, almost to our target before falling back. Now, many traders would have perhaps wanted to close that trade. I mean, feeling like they should finish that trade up. They should sort of just don't want to take a loss. But actually, the trade pulls up again, doesn't hit our target, comes back. But then on the third move, does hit our target. Okay, our target was what we want. It was on 120.79, 15 points above the high of the breakout there. So, we had -10 on the pound against dollar trade and +15 on the euro yen. So +5, okay, in terms of pips for the trade. But remember, it's not about the pips. This is not about the money. This is about you successfully following this discipline exercise, trade after trade after trade. And I have, clients of mine who now work in FX houses, okay, who still, who now work, managing funds for other people. They still do this exercise, okay, as part of their getting themselves ready to be a disciplined trader during the day. Even though they now trade, millions of pounds and euros, okay, as fund managers, they still do this as a small scale exercise at the start of every trading day, okay, for them, just to basically confirm them that they are a disciplined trader. So there you go, ladies and gentlemen. I hope you found that useful. I hope you found that an interesting insight. Take this exercise away. I challenge you, okay? I challenge you to go away and put a sample size of 50 of these trades together. Just challenge yourself to be the best, the most disciplined and consistent trader you can be. And I look forward to speaking to you soon. I wish you the best of success with your trading endeavors. Trade well, ladies and gentlemen. Cheerio. Planet says, thank you, Paul. Valda says, thanks. You're very welcome, guys. Thank you for joining us, okay? Thank you very much.